Welcome back. It's another Monday, and we've got some more green on the board. I'm Keith Fitz-Gerald. Thanks for joining me, as always, for the 5 with Fitz. Let's get rolling. It's a holiday shortened week here in the United States, where our nation is making ready to celebrate the 4th of July. Now, historically, big traders lay off the gas, so to speak. Then they head for the Hamptons or whatever family haunt they prefer for a few days off. But not this year. All three indices are firmly in the green as I type, which tells me they're still hard at work. They didn't get the memo because they're still buying, at least for now anyway. But it makes sense when you think about it. You wouldn't believe how many of these same big money traders are on the wrong side of the old fence because they missed the rally off April lows when they thought the world was ending. If the scuttlebutt is even halfway correct, they've got a lot of catching up to do. They've got to buy if A, they want their year-end bonuses, and B, to avoid clients asking really tough questions about why they don't own this company or that company at the end of the year. Now, all I got to say is thank goodness that we, you and I, because remember, I'm an investor too, we don't have that problem. I have repeatedly encouraged you to buy during the worst of the sell-off this spring, and sure as heck hope that you did. Remember something that you hear me say frequently, and I know at the risk of sounding like a broken record. Investing in optimism beats cowering in pessimism any day of the week. Here's my playbook today. Number one, what if it does work? I've seen it time and time again during the past 45 plus years I've spent in global markets. Investors worry incessantly about losing, and not surprisingly, that's exactly what they do. On the other hand, the world's most successful investors constantly focus on what could go right, and, not surprisingly, they constantly play to that outcome. Think of it as the financial version of hockey legend Wayne Gretzky skating to where the puck will be rather than waiting to see it go by. Now, I encourage you to do the same thing frequently, often at the risk of sounding like a same broken record. My POV is that we live in one of the most exciting times in human history. And I submit, based on my research, there is more profit potential up for grabs in the next 10 years than the last 50 combined. There's a chart in the written version of the 5 with Fitz that I really want you to look at if you've never seen it before, something I call the 6th wave. Take a look for the big red thumbtack. We are here, because that is going to open your mind up, and that's the only way new information gets in, by the way. The profit potential is simply staggering when you don't let fear hold you back. And perhaps not surprisingly, given how I see the world, that's why I am revising my year-end S&P 500 target significantly higher to maybe even 7,000, with the caveat that even that may be too conservative. The fabulous Steuart Barney asked me about that this morning on air just ahead of the opening bell, and you can watch that video elsewhere on my channel. He also asked me about Tesla and why I think every other car maker on the planet should be terrified in their mahogany-lined boardrooms this morning. Number 2, Canada has done an immediate about face. Imagine that. Canada has already backed down from its planned digital services tax that would have slapped a 3% levy on American tech giants like Google, Meta, and Amazon retroactive to 2022. Enough said. And as always, before you get on me or before you let loose on the keyboard, I am speaking purely from a financial perspective. I do money, not politics. Here's an investing tip on a related note. Many people want to inject politics into finance, but the money doesn't care which side of the aisle you're on and never will. It will, however, always flow to where it's treated best, and your portfolio will thank you when you learn how to get your money there first. Number 3 today, Moderna flu vax paves the way for a combo COVID shot. All right, deep breath here. We are on the cusp of customizable medicine, and this paves the way for a standalone flu vaccine called mRNA 1010 later this year if it's approved. Now, if you're like me or you're like a lot of folks out there, many people are going to stop cold when they hear those words, flu, vaccine, COVID, and approval in the same sentence. And I get it, but frankly, that's moot. Here's why. What you and I really want to be thinking about from an investing perspective or an investing standpoint is where this technology could go within the next few years and how much money will be on the table when it does. Moderna is obviously a great investment. Personally, I prefer a few other key names on that front because I believe they have better profit potential and a more aggressive development pipeline. I also happen to like the dividends better because I'm kind of funny about cold hard cash in that department. Anyway, I'll be here if you need me, or, we'll take no offense whatsoever if you've got this covered, and I hope you do, because the profit potential associated with customizable medicine in the next decade or so is ginormous, in my humble opinion. Meanwhile, I'm happy to trim profits and free up capital for the next leg higher, as I noted with the fabulous Kelly Evans this past Friday on CNBC. You can watch that video elsewhere on my channel as well. Number 4. This is a question that's on a lot of people's minds this morning. In fact, I'm already getting some emails about it. Is the green energy bill done, or is green energy done as an asset class or an investment if the big, beautiful bill passes? My take is hardly, despite what Uncle Elon and others have to say about it this morning. Think about this for a second. The pace of innovation is accelerating, and so is the energy demand to power it all, right? And that means that there's plenty of new profit potential with no subsidies needed. It may take a little while, maybe not be a smooth ride, but I've already got my bets placed. Do you? By the way, and if of course you'd like some help sorting out what's what, you may find One Bar Ahead helpful in this department, and hopefully, like scores of other like-minded investors who tell me it's the case, darn profitable too. But that's totally your pick. No pressure. See you if you see you. Love it. Number 5, TikTok buyers or Chinese olive branch? Every once in a while you see those headlines that make you go, Well, I saw one this morning. President Trump says he has a group of very wealthy people ready to buy TikTok's U.S. business, with their names to be revealed in about 2 weeks. Now, the deal would still need Beijing's approval, and it's unclear if ByteDance is willing to sell. But significantly, this comes after President Trump has extended the deadline for ByteDance to divest TikTok for the 3rd time, pushing the ban to September 17th. Now, here's the thing. Potential buyers reportedly include Oracle's Larry Ellison, AppLovin, and Perplexity AI, among others, but the legal and geopolitical hurdles remain. Now, U.S. President Donald Trump obviously credits TikTok with boosting his popularity among young voters and wants to keep the app running under new ownership. But I think, and in fact I'm certain about it, there's more to this story. If I know Beijing even half as well as I think I do, based on decades of experience in the Asian Rim, my guess is that any sale will be announced as part of a new trade deal highlighting some sort of carefully crafted language intended to convey to the world that both countries are making nicey-nice. Now, would I own TikTok if the stock ever sees the light of day? Because it's private now. So if it ever sees the light of day as a public company, would I own it? Likely not. And here's why. Those very same wealthy people will want their profits first, which means that the investing public, i.e. you and me, will be given table scraps at the children's table after the big money makes bank. Anyway, bottom line, it is always better to make money over time than to fret about making money just in time. As always, let's make it a great day and start the week strong. You got this, I promise. Thanks for watching. See you tomorrow.